It's been a very long time since we've talked about NIO stock on this channel, which by the way is an electric vehicle company from China. It's oftentimes been referred to as the sort of like Chinese version of Tesla. Well, after the stock skyrocketed to huge highs, it's now crashed by about 70% in recent months, kind of this past year. And I think the question must be answered, is right now the time to finally start buying this stock? Let's find out together. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Okay, so I think the best way to start this video would be to just do a very quick update on NIO as a company and talk about why the stock shot up but then came crashing back down in recent months. And after that, I'll also share my opinion on their future potential as well as any concerns I have and whether or not I'll be buying any of this stock myself anytime soon. It's going to be a fun one. Hit the like button if you enjoy this, but let's jump into it. Okay, so if you're not familiar with NIO, they basically went public back in 2018 and have seen relatively good success selling their electric vehicles that offer similar premium technologies and performance to that of something like Tesla. And if you compare them to the more expensive Tesla models X and S, then they actually come in at a lower price too, but we'll talk more about prices in just a second. Now, currently, they sell three SUVs at different sizes. There's the largest ES8 SUV, the smaller ES6 crossover, and the smaller EC6 coupe. And then there's two upcoming premium sedans in the ET5 and ET7 that should go into production later this year. To give you an idea of the premium features, technologies, and performance, the ET7 is expected to do 0 to 60 in less than 4 seconds with a massive range of over 600 miles. That is crazy good performance all around. On the tech and feature side of things, NIO's autonomous driving platform features a whopping 33 high-performance sensing units. The ET7 also comes with a 7.1.4 surround sound system with 23 speakers spread throughout the vehicle. They've got their Nomi AI assistant at the front dash. I mean, they even developed some augmented reality glasses for giving a deeper immersion experience inside the vehicle. On the services side of things, they have vans that will literally drive out to you to offer any service you might need, which even includes charging. And they also have one of the things that really kind of sets them apart from so much of the competition. That's going to be their battery swap stations, which is something that even Tesla wasn't able to do successfully. And the reason why those are a game changer is because you can literally swap your battery out for a fully charged one in just 3 minutes, which not only dramatically reduces the long charging times that often plague the EV industry, but they even do a full battery and electric systems check while replacing the battery just to make sure that everything in your car is working properly. And that could be really good if you're about to go on a trip or anything like that. But it doesn't even stop there. NIO also offers what they refer to as a battery as a service plan, where you basically lease a battery instead of outright buying one with the car. And that not only helps with battery degradation, but it also lowers the initial cost of the vehicle by around $11,000. For example, you'd be able to get an ES6 crossover SUV for around $42,000 if you sign up for this plan. Personally, I think NIO's problem though is that they're just a little bit too premium, and that tends to leave their vehicles costing a bit more than Tesla's cheapest offerings, which again we'll dive deeper into in just a second when I talk about my concerns about NIO's future. But so far, all of this innovation and these premium features and services has actually been working out pretty well for them and attracting a lot of new customers. Since the start of their production in 2018, their vehicle deliveries have been essentially doubling every year, with growth of 81% in 2019, 113% in 2020, despite the global health issue, which a lot of legacy auto companies were struggling and they were seeing giant declines during that time. And then NIO even managed to grow by another 109% in 2021, despite coming off of that already very impressive 2020, which is hard to compare to. So I'd say that it's going pretty well overall. Despite all of this success though, the stock has actually been getting hammered in recent months. Now, to be fair, it was skyrocketing right before that, climbing from a low of just around $1.50 or so, all the way up to around, I think they got close to like $67 at one point, which was an increase of over 4,000%. That's pretty crazy. Since then, though, the stock has crashed back down by around 70%. That's a gigantic crash from the top, and that's where it sits today, right around $20 a share. May even dip into the teens at some point. So the question is, why did this happen? What went wrong? And what sent the stock crashing after performing so well right before that? Well, in my opinion, it has more to do with the macroeconomy than NIO itself as a business. Don't get me wrong, NIO does have a lot of company specific issues, namely profitability, which to be fair has at least been improving over the years, but it still continues to be negative in the red. And those losses were so bad at one point that the company was even at risk of going under before being rescued by the local Chinese government, both in the form of help with production as well as monetary investment. Excuse me. You also have to keep in mind that the stock price was already extremely high with a rich valuation right before the crash, and this is all during a time when the macroeconomy has been looking more and more like a disaster. Inflation continues to skyrocket as a result of all the careless spending during the global health issue, leading to the Federal Reserve now being expected to raise interest rates in March. As a result, high growth stocks with rich valuations have been crashing, and most analysts think that the pain will continue for a while. For example, the tech heavy NASDAQ is already in a correction after having fallen by close to 20% from its highs, and that's a result of some individual stocks in particular getting absolutely hammered. Which you guys probably know by now is exactly what happens during a correction. The overall market falls like 10 to 20%, but the highly valued growth stocks within that, they tend to get individually destroyed, and that's exactly what happened to NIO. On top of that, NIO has been getting hit from both sides because China is also having many issues of their own. Not only do they also have a struggling economy from the global health issue, but for a while now, China has also been clamping down on their tech companies and imposing heavy regulations on them, and that's been scaring investors into selling out of most Chinese stocks. And normally, this is where I'd say, okay, this isn't necessarily a company specific issue for NIO, because as a company, they're actually doing pretty good. So if the stock is crashing, then it's probably time to start buying it as it falls, right? Well, while there are some positives to look forward to in NIO's future, there are also some concerns I have. So let me just quickly list those for you guys right now, and then I'll wrap up the video with my overall conclusion. Okay, so starting with the concerns, the biggest one that I have for NIO is that they're much more of a premium luxury brand than a mass market vehicle company. They're basically trying to be like the Mercedes of electric vehicles, and I'm not sure that that's going to be a winning strategy. Despite competing in their own home country, NIO currently holds only the 7th largest market share in EVs, while American Tesla has already climbed to the 2nd highest spot. And one of the reasons for that is because Tesla offers some of the same or even sometimes even better performance for a cheaper price unless you lease the battery from NIO. I made a chart here of the prices. Tesla's in red and NIO is in blue. Apologize if any of these are incorrect, but to the best of my knowledge, I believe that the cheapest Tesla Model Y crossover SUV costs 44,000 US dollars in China. NIO, on the other hand, their cheapest vehicle, which is the ES6 crossover SUV, that vehicle starts at over $10,000 more expensive than Tesla. And even with the subsidies, it's still $10,000 more expensive. In fact, you would have to sign up for the battery as a service package just to get the price slightly lower than Tesla. But you have to remember that the cost for that subscription, I believe, is around $140 a month while you basically own the car. So that's, a big price to pay as well. So it's just really simple. If you want the more expensive NIO, then you're probably getting it for the premium services like the battery swap, the premium interior features. The car even has an intelligent fragrance system that it releases throughout the car, and you got the AI assistant and so on. There's, a few different things. You probably also want the roadside services and everything else that comes with it. It's more of the total package experience that you're paying a premium price for. And I'm just not sure that that strategy will work. Mass market vehicles is where I feel the larger money is, and we know that Tesla has already confirmed that they plan to release an even cheaper model for as low as just $25,000 in the near future. However, there are definitely some reasons to be optimistic about NIO's future. The problem is that a lot of it is either speculation or based on future promises, but if you're in a speculative kind of mood right now, then you're going to love my next couple points. For one, NIO has already said that they have future plans to attack the mass market to better compete with Tesla. In fact, to quote NIO's own CEO, he recently said, "We would like to do something different and offer different products for the mass market." Basically, our thinking is that we would like to launch a product that can have competitive pricing compared with Tesla's products, but have much better products and services. So basically, they want to offer a cheaper car to Tesla, or at least around the same price, but with the features and services that make NIO unique. And the way they plan to do this is by launching a sub brand from NIO that will still have many of the same technological advancements, but maybe a little more limited so that it can reach a cheaper price, which they compare to how Toyota is kind of the mass market version of the more expensive Lexus. Well, that's gigantic news because moving on to my second point here, NIO is also expanding globally. And if they can combine expansion with mass market lower prices, then you're talking about something that could really start to compete with Tesla or anyone else over the long term, especially with the backing of the Chinese government. As it stands, NIO has already entered the Norway market and has stated that they plan to enter at least 4 new European markets this year, including Germany, Netherlands, Denmark, and Sweden, and reach at least 25 different countries by the year 2025. And by the way, it's looking like this will even include the United States since they just leased a new headquarters in California that is more than double the size of the previous one that they have there. So if these things start to actually happen in terms of the expansion and the mass market sub-brand, well, the NIO starts to look really attractive as a spec stock. But that's the thing, a lot of this stuff is still very speculative at this time. And we've seen in the past that NIO has faced some very serious challenges and at one point even needed to be essentially bailed out by the Chinese government, which depending on how you look at it, their ties to the Chinese government could be either a blessing or a curse. Now, personally, I do think that China is going to want to stand behind NIO and help them succeed just because they're going to want a better hold over the global EV market, and some of that may rely on the success of NIO. But at the same time, China can crush them at any moment, like they've done with other companies in the past, and even companies individually or specifically have done things to screw over US investors as well. We have very little rights as foreign investors investing in a Chinese stock. So you just have to keep in mind those risks and realize that you're not just investing in NIO as an electric vehicle company, you're also investing in the Chinese government and you're also investing in a Chinese company, and you kind of have to hope that the Chinese government and the Chinese company are going to do what's best for not just the company, but also for the shareholders. And in my case, it would be a foreign investor. For me, though, that's actually not the biggest concern that I have for NIO stock. For me, the biggest worries I have is how long it takes until we see the larger expansions as well as the mass market prices, because I think those are the keys to NIO's long-term success and for them to be able to compete against larger companies like Tesla and so on. Now, just to be clear, I think there's plenty of room in the global EV market for multiple players. I don't think it has to be just Tesla or just NIO or just some other company. I think there can be several players. But for NIO to compete with those players, they will need to execute on these things. Having said that, NIO has all the potential in the world. They have amazing technology. They have amazing aesthetics. I mean, there's a lot to like about NIO, and there's things that differentiate them, that set them apart from the competition, like the battery swap technology, things like that. So they're very innovative. Also, looking at the valuation, the stock right now has a PS ratio of around 6. That's pretty good considering the growth. So the stock has already crashed a lot. The valuation is pretty decent, and there's a lot of future potential, but they just need to execute. So where do we go from here? Am I thinking about buying the stock myself? Well, I actually would be interested in picking up a very small amount and then just kind of adding to it if it continues to fall, because that's one of the things I love to do. But unfortunately, I'm in a difficult spot right now because over the past year or so, I've been buying a lot of spec stocks, and I only allow less than 10% of my portfolio to go to spec stocks, and I've just purchased too many recently. And by the way, most of those are down, which is not a bad thing. I actually like my stocks to be down because it allows me to buy more. I like to buy as they're going down, but I don't want to add too much to that. I don't want to get too much exposure to high risk spec stocks. So I think I'm going to sit this one out for now, keep an eye on it, see how the expansions go, see how the mass market sub brand develops and all that kind of stuff. And if the stock continues to fall, well, at some point it might just get too attractive for me to ignore anymore. The risk reward ratio might just be worth it at a certain price. So if it falls into the teens, especially the mid teens or even the low teens, at that point, I'd probably make an update video to let you guys know that I bought some of the stock. But if I wasn't in this position where I already have so many spec stocks and I was actually in the market looking for a spec stock to buy, well, NIO would be right up there. I mean, I really like NIO. I've always liked NIO. I used to own NIO stock, but I made a lot of profits on it and I ended up selling it. But I've always kind of liked NIO. I've always liked the story and I've always liked their future potential. So it's right up there with any other spec stock if I was in the market looking to buy some. So I'm going to keep an eye on it. It's kind of a maybe right now for me. At this price, I'm kind of 50-50. I'm not really sure, but I'm leaning a little more towards being cautious just because I already purchased so many spec stocks. But if I was going to buy it, I'd buy it very slowly and just kind of see if it falls more and then just kind of add to it. Either way, just kind of waiting on the sidelines is not that big of a deal because it gives me more time to see if they're actually able to execute on some things. And if the price goes up, well, you know, it might still be worth it to pick up some stock if they're actually expanding and doing well. So anyway, those are my thoughts. That's how I feel about NIO stock right now. I'm going to wait a little bit longer, but I will let you guys know if I do end up purchasing NIO stock. Anyway, I hope you guys enjoyed the video. Let me know what your thoughts are down below. Do you agree with some of my thoughts and opinions? I'd love to hear your thoughts. I'll try to respond to as many comments as I can. Thank you for stopping by. Hit the like button if you did enjoy the video. It means a lot to me. It really helps the channel. And I'll catch you in the next one. Take care. Bye-bye.